Hi, this is Drew with Daniels Ag Services with your post-WASDE Wilkins Ag Wire update. Without further ado, let's grab the whiteboard here and get into the numbers. All right, so I'm going to get in here close. What we're going to look at here is in the black is the U.S. estimates for ending stocks, Brazil production, and Argentina productions in the black. And then what we actually got from the USDA today will be in the blue. So U.S. ending stock estimates were expected to come in at 1.488 billion bushels. Actually came in a little lower than that at 1.456. Beans came in at 145 million bushels compared to the trade estimate of 141. So that was only lowered 5 million bushels from the USDA's February estimate. So some traders were a little disappointed in that, thought it should have been a little lower, but in the grand scheme of things, not just a huge miss by the trade there. And then wheat came in at 558 million bushels versus the trade estimate of 570. So we came in a little lower in wheat and corn than the trade was expecting. We actually came in a little higher in beans than the trade was expecting. As far as Brazil and Argentina goes, the only thing USDA changed from their February projections was the soybean production in Brazil. They actually lowered it 1.5 million metric tons to 88.5. The trade was actually expecting it to be a little lower than that, though. And as you can see here in Brazil, as far as corn, not much change. About 1 million metric tons there. Not really much change from what the trade was expecting versus what we got out of Argentina. So the main change that we got out of South America was the soybean drop like the trade had predicted. If you want the full realm, including the world stocks, head over to grainanalyst.com. The daily report will have all that in there for you tomorrow. So what does this mean? How did the trade digest the data? Well, we actually ended up lower across the board today. There was some liquidation going on. There's concerns, this is WASDE related, but there are concerns over some weakening economic data over in China. That had some pre-report liquidation in place. Then, it wasn't as bullish as thought for soybeans, actually a little bearish with that higher U.S. ending stock numbers. So that caused some liquidation. We've gone up, 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 and up almost across the board here lately as far as corn, beans, and wheat go. The trade was kind of maybe looking for an excuse to do some liquidation, maybe take some profits, and it found some reasoning today, so it did that. There were some concerns of how strong these long positions were. Were they all funds or were they long-term fundamental traders? Well, if you read Grain Analyst, you know that a lot of long-term fundamental guys are basically just sitting waiting to see what happens right now, not participating in the market. So maybe people might be a little more easy to shake out of a long position now than, say, if it was some of the long-term fundamental type traders taking short profits here and there, and that's like what we saw today with some of the liquidation as well, combined with the weaker economic data out of China and combined with the WASDE report today. So again, we finished lower across the board. Not really just extreme bearish data out there today, probably a little exaggerated move, but again, based on the reasonings that we said, combine that data with China and the fact that we likely had some profit taking as well on some shorter term traders, sent us lower across the board. So that's all we've got for today for our WASDE wrap up. If you have any questions, let us know. Otherwise, we'll see you tomorrow morning.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.